I want you to compare both the strategies side by side. The difference is starking and a little tweak into the strategy. Hi everybody, welcome to a very special video. Today we are going to talk about one of my favorite option strategies, strike mode, low margin strategy for working people. As always, I'm gonna prove this concept in front of you and I will let you compare after a few minutes which is a better way to do. Before we start, standard disclaimer: any strategy which you learn contains a certain amount of risk. There is no holy grail exist in the market. Now let's talk all the fun now. To protect against black swan, this is most traders do. I want you to imagine something. Maybe you already have an option strategy on in the market, but what if market give you a 500 points gap down on Nifty, a 5% gap down on your favorite index? Then this is the most scariest thing ever. It's gonna be a real fun video. Make sure that you share this video right after learning everything about this. So here we are on an option simulator. You are expecting some kind of a gap down example, and this is at the money 25,100. Now, for any gap down protection or a black swan event, this is the most popular method, is that we simply buy a put. Can be monthly, can be weekly, and as soon as we long it, this is how it's going to look. I'm gonna show you, and then the better alternative, and then we're not gonna stop there. I'm going to tell you the VIP points here. So suppose if we buy a put which is trading at 119.3, what do you find here is that if market stay where it is, they're gonna be theta decay, because we have bought a put option. So this theta decay, it's not good for us. Also, what you see is the loss is on a tune of approximately 9,000. But the worst part is that market really has to move really significantly. You could see the break even here, which is approximately 24,680. Market is 25,091. So if market stays here for a few days, then market really have to travel really fast. And imagine if you do hedging like this, especially on a Friday, we have Saturday and Sunday, 2 days of theta literally leaking out from our trade. But this story, we try to improve it, we try to make it better, right? So let's learn about this. Let me just completely square it off, reset it, and again open an option chain. Now the first things first, what we're gonna do is a better alternative. So definitely we look to buy a put option, but we're not gonna buy a put option which is so far out of the money that market really have to move really fast and quick. What we can do is we can buy and add the money put. Okay, this is a step number one. Step number two is that now we go little in the money and we sell a call option. We can do this. Why are we selling in the money call? And in fact, who trades like this? Have you seen this kind of a trading method? It's very different, right? We do this, done. Now the last and the final point is we can go really deep in the money, and now we are longing a call option. I'm gonna explain you in slow way, right? Let's just see how this looks. Let me just show you how this is. So this is how it is. First, we longed at the money put, very easy. Then we went little in the money and we shorted a call option, right? Very different. And then because we don't want to sell anything naked, we have to provide the cover, and then we long a call option which is slightly in the money. When you do something like this, this is how the payoff looks right in front of your screen looking at you. Now here, I want you to really compare this versus if you just simply buy a plain vanilla put option, which is something like this. You see a starking difference. That is, the maximum loss here is -9, as you can see, comparable to here, which is approximately half. Point number one. Point number two, that market doesn't need to move really fast and quick. Market moves just a little bit, and immediately what you see is that there is a green bump which is visible here, versus here the break even is really far. That is number two. Number three, if markets start to go against you, there are some simple adjustments which you can do to make sure this red zone, we can take care of it, we can reduce it. Remember, there's no strategy which is 100% holy grail. And if you're learning something really good, and I have more things to add to this, ensure to share this video to at least one person. And if you're somebody who really want to go more deeper into insights, more adjustments, much better way to trade, the form which you see on the first pinned comment is your entry point if you would like to go more deeper in concepts like this. Now we're gonna talk about the VIP points and how do we make this strategy standalone, or if you would like to club this strategy with your existing strategy, how do we do it? So VIP point number one is this can be a very good supplementary strategy. Now imagine if you have long in the future, or you have already made a short straddle or strangle or positional, any of the strategies, but you doubt what if market gap down. Now, is it going to provide you the full cover? It depends on how much margin you're using, but it's going to provide you some amount of cover because this is more like a bearish strategy versus this, which I've made it already clear for you right here. And this alone provides you a bit of safety if you plan to use it alongside the strategy which you already running. Now, how many times market has given gap downs, right? Many times it has happened, right? But maximum people are not fully prepared for it. Maybe it's not your fault. Maybe you were not exposed to the better methods to do. Now, I want you to see both the techniques and you figure out yourself which is better, which is not, and most importantly, why this is better comparatively. And if you're learning it, if you're seeing it for the first time, also ask yourself, why till now nobody told you how you can make it better? This is the difference when you actually sit and learn. This can be very good before events or major news, of course. Suppose if you're holding a portfolio and you expect some kind of a gap down surprise, then this also can come pretty handy for you. But remember, on the upside in this strategy, there is loss. Like there is no holy grail, there is no 100% guarantee of a strategy. But still, these kind of hedging techniques brings a lot of comfort, brings a lot of sigh of relief. So I'm pretty sure that you have learned something really good, comparable to what's really popular and what maximum people do. Now you can check the pin comment or description for resources if you want to go more deeper into this. Thanks for watching, and I wish you all the very best with your trades. Take care. Bye-bye.